You were saying all week, in fact, you were writing to me on a Bloomberg every time I discussed this, that this was a sell the news story. This looks like a buy the news story this morning ahead of the open.
Well, today, I mean, listen, we're looking at thin holiday trading conditions. We're looking at quarter-end window dressing and honestly, a very fabulous CCAR result.
Yeah.
So, yeah, today we're going to see these stocks rock and roll. What, to me, is more interesting is what happens on the other side of the holiday.
And what happens on the other side of the holiday?
Well, we're looking at weak second quarter earnings, particularly in the capital markets. We're looking at interest rate structures that are still going to be dependent upon what the Fed does. We're looking at deregulation into 2018 and tax reform. And I think there are question marks around all of those.
We are seeing a big move in the bond market, though. Volatility picking up just a touch. You've been skeptical of volatility, saying it's going to be bad volatility, bad for trading revenue, bad for banks. What about this kind of vol? Could it be good?
Well, bad volatility to me has three characteristics. It has reduced client engagement. You saw that in the second quarter. That hurt their trading results. And then you have gapping prices and you have whipsaw moves. You saw that in the currencies with the central banks flip-flopping back and forth. That's tough for a market maker to hedge. I think we haven't seen the gapping prices and the whipsaw moves yet in the capital markets, and that's what's going to be in the back half of the year, along with a debt spread widening trade. And these banks are carrying huge inventories. You know, they claim that they're not doing proprietary trading, but Bloomberg's story the other day on Deutsche Bank shows that they are doing proprietary trading.
I like the little promo there. Thank you very much. Is there a distinction of sort of the best to capitalize on the trend we've seen and the worst off heading to earnings season?
I'm sorry, I didn't understand the question.
Who's the best and worst off?
Well, I think the brokers are going to be the weakest. Morgan Stanley and Goldman Sachs are out getting analysts to cut their estimates. I think Citi probably will have a weak second quarter, but people are looking to the second half. And I think Bank of America and JP Morgan will be pretty solid.